Hey, it's Michael Saul with the Stock Market Trading Watch List for Monday, October 3rd, 2011. S&P 500 video is up on the blog. Here is, using the SPY, here is the cash index. And you can see we broke out of this little consolidation, the mini coil, on Thursday, but we closed back inside it, so I kind of poo-pooed it. And then you see we came back out of it on Friday. We actually gapped down out of it. The S&P cash is why I don't like really using it, because there's not a lot of gaps in it. All right, the SPY or the S&P futures using the day session, you actually see the gaps. Anyway, so this low is going to be key at 1114.22, and then below that, if we break that, it will more than likely be a quick trip down to the lows. Now, overall, my opinion is that we don't start a new leg here. Okay, everybody I read this weekend, and some of the people I respect, some of the people I just don't have an opinion on. And I don't read anybody that I just read just to see how idiotic they sound, right? But some I lend more weight to than others. So just about everybody, I think a couple of people were saying that the market is going to bounce here, and one person saying it's going to be a huge surprise. But the opinion is that we're going to go down. A lot of people are calling for a crash. They're saying unless there's some big policy intervention, and I think that maybe they will try to do something. I almost said we there. Maybe the government will try to do something, or somebody over in Europe, or maybe here in the States, and they'll try to stop the bleeding. But I don't think it's going to last very long. And I think it's a Band-Aid on a big 50 caliber bullet wound. And you can Google that image if you really want to see how big that is. I think that we have lower prices to be seen, but I think we're going to go into an oozing bear market more than one that just crashes and gets it over with. Now, there'll be volatile spikes because that's how a bear market acts. But I think the waiting for the crash, I just think it's, everybody's waiting for it. And I think that's why it may not happen. But my opinion is that we test the lows, we break them by a little bit, and then we come back up and continue to chop. I don't think that's it. I don't think we double bottom. I don't think we rally into the year. Of course, if the evidence proves differently, then I'll adjust. I hate making longer-term predictions because, that's not the way I trade, and that's not my strong suit. And to be honest, people that make long-term predictions and get it right once in a while, I don't want to disrespect anybody and by saying this, but longer term stuff is a lot of luck. Okay? Yeah, we can all sit here and know that, we're in really bad shape, right? Credit card debt's huge, and savings is up, and people are not spending and not stimulating the economy, and places are going out of business left and right. I know where I grew up, a couple of places went out. I was talking to my brother-in-law, and one pizzeria that we were in a couple, I guess now it's 6 weeks ago, was booming. And now they were auctioning off, this weekend they were auctioning off the equipment. And we were both baffled, like we couldn't believe it. So yeah, we all know how bad it is, but how does it help us? Okay, I don't know, and I don't mean on a big, psychological way, like how does that help us with the negativity? No, how does it help us make money? Are we just going to buy leaps, some leaps, some puts, and just say, okay, when you get there, we'll see you there? So anyway, let's look at the NDX here. The NDX broke down out of this bear flag or channel, whatever you want to call it. It looks more like a channel than an actual bear flag, but you could call it both. The problem I have is that it got back over the 200-day, but we broke out of it, and the NDX has been leading. It's been showing good relative strength, and now, hey, it finally broke a swing low, right? It's been putting in higher swing lows, this one by a hair. I think. Let's double check that so I don't look too foolish. Yeah, by a hair, right? And then the next one, and then the next one, and then the next one. Just barely again, right? Not as close as this one. And then this one finally broke it. So this is a change of character for the NDX. And like I said, the NDX has been showing good relative strength. If it starts to lead to the downside, it could get ugly quick. So that's something really want to pay attention to. Here's the Russell. It already hit a new low on the year. Looks like it wants to drop out of bed. And the Dow, same as the S&P. Okay. So, I mean, here's the Dow. Actually had a small double bottom already, but it looks like it wants to go lower. So we really have to focus in on the Nasdaq. All right, here's the SOX. Also was looking nice, looking good relative strength, even here, and then all of a sudden, boom, breaks a swing low. Not good. Okay, the SOX was showing some good relative strength. Banks still look like crap. Brokers still look like crap. Okay, they look like they're going lower. Cyclicals look like they're going lower. Okay, XLB went lower. This is not good. This is not good for the market. The XLB trading to a new low. Here's junk bonds. Okay, again, the junk bond. It's the spider. New lows, not good. Okay, not good when this is leading like this. Let's look at oil. Okay, oil looks lower. Here's the OIL and the USO. Gold looks lower. All right, nice little consolidation here. I don't get gold quotes live, but this looks like this wants to go down. Test this level first, 152.75. And below that, we have the 200-day at 148.89. Silver looks like it wants to trade lower. Okay. First target would be down here, 2603. Then below that, whole level 25. We looked at ANV, I believe, last week. So far, it held the 200-day, but be careful on this one. An okay day on Friday. Let's see if we can get a bounce up if gold doesn't just drop out. All right. And also, it is above the 200-day, but I just don't see it holding up if gold's going to fall. All right, let's go through some of the big names. Apple through the 50-day, just not nice. 89 next. All right, comes in at 373 basically. Amazon, all right, 50-day moving average, 211.78. Watch that for support. The Goog. Yeah, it's not looking good. I mean, I've been talking about Google showing poor relative strength for a while. Then it popped up, and now it's back to showing poor relative strength again. All right, so it already broke through the 78.6% retracement. This is targeting these lows down here now. I mean, it broke through it here, then it consolidated. Now it looks like it's back to targeting down there. Price line, I mean, looks just awful. Support at 441.25. Then it could really make a quick trip down to 400 if it loses this. Okay, which would be like a 10% drop from that level. Right, 416 maybe a stuttering point. Then you got 395s, but 400 would be a stop on the way down. NVEC. Okay, this is one somebody wrote in, wanted me to take a look at. It's not really showing that great relative strength. I mean, it's above the 200-day, so I guess you could say it's showing some relative strength. But overall, I mean, this was a nasty drop. It took out this last low here. I'd watch it, but I don't really see a trigger there. U.S. Steel looks lower. Okay, JRCC, somebody wanted me to look at. Yeah, it looks terrible. Patriot Coal, somebody wanted me to look at. Yeah, again, looks terrible. The coal holder, that's a Market Vectors coal ETF. Yeah, does not look good. A lot of these are stretched here, so if they were to get downside, you got 28.35 on this one as next support. So these are stretched. So if they get further downside, okay, it could lead to a reactive bounce. Keep that in mind. All right, Baidu. Yeah, horrible. 100 fell just shy of 100. Breaks that. Next support looks in the high 88s. Cena. Yeah, ugly. 60. Next level to watch there. CMG. Okay, 89 EMA. Closed a little bit below it, but around that level looks to be holding. Breaks that. Could be in for a quick trip down to the 200-day moving average. Can move quick. Look at price line. Can Netflix, inside day on Friday, narrow range day. See if it forms another couple, maybe sets up another continuation pattern. Goldman. Wants to retest the lows. Okay. 78.90 or 78.89, something like that. Next support. If it gets down below these lows with a bullet. Okay, RIM. Still think it's going to be a teenager sooner than later. Exxon. Yeah. Went up to the 50-day and held. Overall, this just looks like a consolidation. See if this can drop out. Is ConocoPhillips. Looking a little, doesn't have the relative strength that Exxon has. Hess. Yeah, this one looks not so hot there as well. And Electronic Arts. Okay, let me try to clean some of this up. 200-day moving average held for now. All right, we could put the Fibonacci retracement up. See if we break below this 1980 number. What is it, 1940? Yeah, like the 1980s. All right, then we're looking at 1882. All right, have a great trading day on Monday. Let's see if that break in the NASDAQ is going to lead to a quick test of those yearly lows. I mean, we're not that far away on the S&P and the Dow, and of course the Russell. NASDAQ would take a little bit more work, but let's see what happens here in the beginning of the week. Have a great trading day. I'll talk to everybody again on Tuesday.